attempts to curb inflation will end in a recession, and markets plummet as a 75-point rate hike looms. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. The U.S. Federal Reserve's attempt to reduce the highest inflation in 40 years will end in a recession. That's according to bond market analysts. Key sections of the Treasury curve have inverted after Friday's U.S. inflation shock triggered alarm over more aggressive interest rate hikes. The 2-year yields exceeded 10-year rates, while 5-year yields rose by 17 basis points above 30-year rates. It's the widest inversion in more than 20 years. Analysts say the U.S. curve has inverted before each recession since 1955, with a recession following between 6 and 24 months. U.S. equities plummeted overnight as a 75-point interest rate hike is now largely anticipated, and there's even speculation of a full-point interest rate rise. The S&P dropped 3.9% overnight, confirming it's now a bear market. It's tumbled about 22% since its January 3rd record high close. Meanwhile, the Dow Jones lost 2.8% and the Nasdaq closed 4.7% lower. Investors are now nervously looking ahead of the Federal Reserve's policy meeting tomorrow. The price of Bitcoin dropped below $21,000 this morning, having now lost 2/3 of its value since its highs. The cryptocurrency market has fallen victim to a massive sell-off as several large exchanges either stopped sales or announced layoffs. Crypto lending company Celsius first sparked fears by suspending withdrawals. Amid the sell-off, Binance was forced to halt its exchange due to a backlog issue. Crypto firm BlockFi announced it was laying off 20% of its workforce due to the challenging market environment. The U.S. dollar is at a fresh 20-year peak today as just about everything else is nursing losses. Analysts say consecutive 75 basis point rate rises in June and July are close to fully priced, sending shockwaves across asset classes. The dollar has gained with yields and as investors seek shelter from the storm. The dollar has hit 1-month highs on the euro, the Australian dollar, the New Zealand dollar, the Swiss franc, and the Canadian dollar. China risks a smaller autumn harvest that could supercharge demand for commodities just as the world can afford it least. China is relatively self-reliant, producing more than 95% of its needs in rice, wheat, and maize. But relentless COVID disruptions, higher fertilizer and fuel costs, and issues with access to equipment threaten the autumn harvest of key crops such as soybean and corn. Experts caution even a small rise in demand from the world's most populous nation could drive global commodity costs up sharply. In other news, France's Total Energies has agreed to buy a 25% stake in Adani New Industries Limited as part of the deal to form a new green hydrogen project in India with the Adani company. Total Energies, one of the world's biggest oil and gas producers, has faced criticism from climate activists and has been moving into the renewable energy sector and diversifying away from hydrocarbon-centered activities in recent years. Elon Musk's SpaceX has raised $1.68 billion in fresh financing. The rocket company looked to raise $1.72 billion, according to securities filings, with $40 million in total remaining to be sold. It's SpaceX's first funding this year after completing a $377 million fundraising round in December 2021. It reportedly brings SpaceX's valuation to around $125 billion from $100 billion after December's round. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.